Here at Bitcoin Market Journal, we're combining traditional value investing with valuable crypto investing. And our recipe for success is simple. We make monthly investments into a diverse portfolio of stocks, bonds, and no more than 10% quality crypto assets that we play the long game, holding onto them for 5 or more years. This strategy has way outperformed traditional investors who don't invest in crypto. We lovingly call them the non-believers. We spent 5 years publishing thousands of articles, investor scorecards, and research reports explaining why this works. You can read all those, or you can watch this quick video series. Today, how to manage crypto risk. The first concept is that crypto is a roller coaster. These markets are still new and immature, and so are most crypto investors. So the price of Bitcoin and the entire crypto market fluctuate between manic highs and depressive lows. And it's this volatility that scares off most traditional investors. That's why we keep our crypto holdings between 2.5% and 10%. The obvious way to manage risk is to only invest a little bit into crypto. No more than 10%. That's enough to participate in the growth of crypto, but not so much that a crash will wipe you out. Even if the price of Bitcoin goes to zero, you've lost a maximum of 10% of your overall portfolio. We also steady drip invest because our greatest enemy is our own minds. Crypto runs on hype cycles. So when the price of Bitcoin is high, everyone wants to buy. When the price goes to hell, everyone wants to sell. This is the opposite of how you should invest. Instead of buying low and selling high, most investors buy high and sell low. The solution is steady drip investing, also called dollar cost averaging, where we buy the same amount each month regardless of price. We do this with monthly withdrawals. Think of a 401k investment plan that's automatically deducted from your paycheck. You never notice it's missing. Our goal is the same. We want to set it and forget it. You can do this by setting up automatic monthly withdrawals through services like Coinbase for monthly investments in crypto and Betterment for monthly investments in stocks and bonds. Finally, buying and holding saves on taxes and fees. For small transactions, fees can take an enormous bite out of your crypto holdings. Listen to me. Fees are the silent killer of wealth. That's why frequent trading is a bad idea. Also, every crypto sale is taxable. So when you buy and hold for the long term, that lets your investments grow tax-free. This is how we manage risk, but the strategy is incomplete without the 3 most important words in crypto investing. That's what we'll cover next. Keep watching.